The eCom Seller Summit was created to prove that with the right tools and training, anyone and everyone can make money in e-commerce. So many people want to try their hand at e-commerce, selling on eBay, Amazon, Shopify, and more, but they're afraid they won't be successful. This summit will show you that there's many ways to do e-commerce, and there are many platforms you can explore, because e-commerce really has no limits. It really can pay your bills, and e-commerce never sleeps. There's nothing like waking up to profits from getting sales all night long. My name is Nicole Whitlock, and this is the eCom Seller Summit.
Hello and welcome to the eCom Seller Virtual Summit. My name is Lusundra Everett. I am the Home Biz Tax Lady, and today we are going to be talking about business structures in e-commerce. So first of all, who is the Home Biz Tax Lady? First of all, I am the principal owner of Everett Tax Solutions. We are a virtual tax firm currently in Virginia, in the Richmond, Virginia area. I am an enrolled agent, which means I'm federally licensed by the IRS to prepare taxes and represent taxpayers before the IRS in all 50 states. I'm a member of the board of directors for the Virginia Society of Enrolled Agents. I'm a member of the National Association of Enrolled Agents, and I am a National Tax Practice Institute graduate. And that means that I got some really cool information and learned how to solve tax problems for taxpayers. I am a student of taxes. Okay, this is what I do. I have over 100 hours of continuing education per year. That's important because we're only required to have 24 per year, but I usually average about 100 so I can stay on top of what's going on in these tax streets. I do sell on e-commerce, right? I've been doing e-commerce since December 2012. I still remember my first sale. I was actually in Las Vegas on vacation. I have sold on eBay, Amazon, FBA. I've done drop shipping. I sell on Etsy. So I have used a lot of platforms in e-commerce. So my experience is coming from experience, not just theory, right? I am a mom of 2 teenagers. I'm a military spouse, and I love music and movies. But I must do the obligatory exclaimer. What is shared here is for entertainment purposes only. Please consult with your tax professional about your tax situation. All right, let's get started. We're going to be talking about business structures. Okay, and these are the ones that we're going to cover today. We're going to talk about the sole proprietor, the single member LLC, the partnership, the multi-member LLC, S Corp, and the C Corp. Now, let me say here now that in this session, you are not going to have enough information to make a decision about what business structure is right for you. I am simply here to give you the basics of what you need to know so that you are aware of these things, okay? And I'll also note right here, please note right here where you see this little line between the two of these, that's because they are very, very similar in their operation. All right, so first of all, let's get started with the sole proprietor. The sole proprietor is the simplest business structure. But it is a business structure. One of the things I hear all the time is that sole proprietor is not a legitimate business, and it is a legitimate business. It is a legitimate business structure, okay? It's just the simplest form. It generally only requires a business license from your local government. You go down to your city hall, you get a business license. It's generally less than $50. Most of them that I've seen are generally $20, $30 to operate, okay? Now, as a sole proprietor, there is no separation between the business owner and the business. And the way I describe this is that if you, the owner, die, your business dies. As long as you're alive and operating, your business is alive and operating, okay? And you can be held personally liable for debts and the liabilities of the company. And that's where most people get scared and think, oh my gosh, I want to do something else, but it's really not that bad, okay? You pay yourself simply by writing a check from the business to yourself. One of the mistakes that a lot of sole proprietors make is not separating the business from their personal period. And you should absolutely do that. You can get a tax ID as a sole proprietor. You separate your business from your personal, and you write a check, yes, an actual physical check, from your business to your personal to pay yourself. That's it. Any profit that you have at the end of the year is what the IRS considers as your salary. So when you go to file your taxes and you claim all of your income and you deduct all of your expenses, whatever is left over is profit. That is what you pay self-employment tax on, and that is what the IRS considers as your salary for the year. You file a Form Schedule C on the 1040 tax return, and those tax returns are due April 15th. Oh, too fast. All right. Partnerships. Partnerships are also very simple forms of business. Two or more people decide to go into business together, and you can have unlimited partners. Now, one of the things that I want to point out here, and what the asterisk is for spouses. A lot of times spouses will come to me and say, okay, my husband and I have gone into business together, or my wife and I have gone into business together. And I say, okay, great. And if you are not in a community property state, I believe there are only like 6 community property states, 6 or 7 community property states. If you and your spouse go into business together, you have created a partnership unless you are in a community property states. Those states have different rules. But by and large, 2 people spit shake and decide they're going to go into business together. Boom, you have a partnership. Again, it generally only requires a business license from your local government to operate. You can have general partners and limited partners. So general partners are personally liable for the debts of the business, okay? Where limited partners are limited in their liability up to what they have put into the business. So you may have partners who have contributed, whether it's cash or property, and their liability is up to what they have contributed, where general partners may have unlimited liability, okay? Partnerships file a Form 1065, and those are due on March 15th. Now, the partnership does not pay federal taxes at the entity level. The states, however, may vary. Okay, so you may not pay taxes on your federal return. Partnerships do not, but your states may require something different from the business. Okay. Profits and losses are passed through to partners on a K-1. One of the biggest mistakes that I see people make is they're a member of a partnership. They've come to me to file their partnership tax and say, oh, I need to file my business taxes. Okay, great. And then I ask about the personal taxes. Okay, well, the personal taxes are already done. Well, if you are a member of a partnership, you can't file your personal taxes until the partnership is done, because you need that K-1 to add to your personal return. So if your partnership files an extension on filing your taxes, then 9 times out of 10, you're going to need to file an extension for your personal taxes, okay? And if you file your personal taxes before you get your K-1, you're going to have to go back and amend your personal taxes to include that. So just don't do it, all right? Now, partners who work in the partnership, that means that you are physically doing the work day to day. If you're taking a salary, in which you should for your services, then you get paid guaranteed payments when working in the business, and you'll owe self-employment tax on that. Okay, and so how much those guaranteed payments are really is an agreement between you and the other partners that are involved. All right, single member LLC. A single member LLC or LLCs period are disregarded at the federal level. And what that means is that the federal government does not recognize LLCs. They tax you based on whether you are a sole proprietor, partnership, etc. So a single member LLC, the default is to be taxed as a sole proprietor at the federal level. You would still file a Schedule C with the 1040 tax return that's due April 15th. It's registered with the state at the state's Secretary of State website, okay? And it's a state-run entity. So that means that every state has their own set of rules. Every state has their own fees. So there's no standardization about single member LLCs across the 50 states, okay? You still going to need your business license from your local government. Having the LLC is great, but you still need a business license from your local government. And the states generally require an annual report with a fee. And again, those fees vary. There are some states that don't even have an annual fee. They just want the report. There are some that require a standard fee, and then there are some that require a fee based on the amount of gross receipts or even the net profit that you have earned. So you have to know what your state requires as far as your annual reporting goes. All right, multi-member LLC. Again, 2 or more people or go into business together. And the same thing with the partnership. If you are spouses in a community property state, you are not going to be considered a partnership in the filing a separate partnership return aspect, and there's just different rules for the community property people. Okay, so with the multi-member LLC, you can have an unlimited members, all right? And it is a state-run entity registered with the Secretary of State. You generally file an annual report and pays the annual fee to the state. Same thing as a single member LLC. The default federal tax classification is a partnership, and you will file a Form 1065 that is due March 15th. Again, community property state people, you got some different rules. The multi-member LLC does not pay federal taxes at the entity level, but the state may require something different, all right? And profits and losses are passed through to the partners' members on a K-1, just the same as a partnership. So when you hear that term disregarded entity, that means the IRS is saying, okay, yes, I understand this is an LLC, but for tax purposes, we're going to tax you either as a sole proprietor if you're a single member LLC, or we're going to tax you as a partnership if you have a multi-member LLC. All right. And it does get more complicated when you have partnerships and multi-member LLCs that are spread across different states. There's a whole lot of considerations, and especially with the globalization of e-commerce, you may have, multi-member LLC members or partners who are in 2 and 3 different states. And it absolutely complicates the filing at the state level. So it's really not forming partnerships is really not the same as a single member LLC, but with multiple people. There is a whole nother level of tax preparation and compliance that goes on when you cross multiple states. The S corporation. I get more questions about S corps than anything else. Okay, so let's talk about some rules. The S corp can only have 100 shareholders. Okay, spouses count as 1 shareholder. All shareholders must be a U.S. resident or resident alien, meaning they are a green card holder holding immigration form I-551. Okay, so that means that a person who is foreign to the United States cannot be a member of an S corporation. And I really want to talk about this for just a second, this residency requirement, because if you have an S corp owner, shareholder, who is an American citizen, and then you marry someone who is not a U.S. resident or who is not a resident alien, then you no longer can be a member of an S corp. So if you're the owner, then you automatically revert to a C corp. Okay, so you have to be careful of those things. All right, now the owner must be an employee of the business and take a reasonable salary. And again, we'll stop right here. Generally, when people get to me and talking about S corps, they're talking, about, oh, they heard their friend had this S corp, they only pay themselves $10,000, $20,000 a year, and then they take distributions of like $100,000. Okay, let me tell you that is incorrect, and you can wind up in lots of trouble. And so what the IRS looks at and what they ask, very simple questions. If you had to go look for a job, if you took a job doing what you do, would you work for $20,000 a year? And the answer is generally no. If you had to hire someone to replace you, would you expect to pay $20,000 a year? And 9 out of 10, the answer is no. So you've got to take a salary. What happens if you don't? Well, if you don't and your S Corp gets audited, the IRS can reclassify your income to what you should have been getting paid. And then you have all of the fines and penalties with the late employment taxes and all that. It really is an ugly thing. The S Corp does not pay taxes at the federal level. It's essentially an information return. Just like the partnership 1065 is also an information return. You still have to file it though. Okay, it is a requirement for you to file your return. The failure to file penalties for S Corps and partnerships are like $210 per month, $210 per month per partner. Okay, so you can be on the hook for a lot of money if you do not file your S Corp or partnership returns. Okay, now for the S Corp, state requirements vary. Some states don't even recognize S Corps, and you must file as a C Corp at the state. There are some states who tax S Corps based on your gross receipts or your net profit. So even though you have the pass-through of, the income and expenses, your S corporation, the business structure, may also be liable to pay state taxes. Okay. And file a Form 1120-S that's due on March 15th. And again, the profits and losses are passed through to the shareholders on the K-1. And the K-1 is where the taxes are paid, based on your amount of ownership. But again, just remember that the S corporation may be on the hook for some kind of tax, whether it's a franchise tax, income tax, or whatever at the state level. State rules do apply here. Now, the reason that people are looking at S Corps is because there's no self-employment tax on distributions. And what distributions are, you've made your money, you've paid your expenses, you've got profit left over, so then you take that profit as a distribution. And you pay income tax on that, but you don't pay that 15.3% self-employment tax on those distributions. But that's why generally people are looking at forming an S Corp or electing S Corp status because they want to save on that 15.3%. But I promise you that is not the only consideration when it comes to filing an S Corp. All right, C Corporation. You can have unlimited shareholders. These are all like everybody knows about a C Corporation because this is what our country is. We got corporations everywhere. You got Coke, you got Facebook, you got all of these huge corporations, banks and whatnot, okay? U.S. residency is not a requirement to have a C corporation. There are people who live in other countries outside of the United States who own corporations in the United States. And again, that's a whole nother level of tax preparation. But with the globalization of e-commerce, it is definitely a concern when it comes to these business structures, whether it's a partnership or a C corporation, to how that foreign person is taxed and how the business entity is taxed, okay? Now, the C corporation is the only business structure that pays its own federal and state taxes separate from the individual. So all of the other business structures are pass-through entities. That's the S corporation, the partnership, the multi-member LLC, the single-member LLC, the sole proprietor. All of those are pass-through entities. That is because the income and losses are passed through from the business to the personal return. Okay, where the corporation, the C corporation, it files and pays its own taxes at the business level. Now, shareholders pay taxes on dividends issued from the corporation. Generally speaking, that's a regular income tax rate, but there are some instances where it would be taxed as a capital gains rate, but by and large, income tax rate. So the corporation, and this is where that double taxation comes from, the corporation pays taxes on its earnings, and then the individuals, when they get dividends, pay taxes on that money at the personal level as well. Corporations file a Form 1120. Those are normally due April 15th unless it's a fiscal year, and that also applies to the other business structures. For the single member LLC and for sole proprietors, you have to have a really, really, really compelling reason to not be a calendar year and operate under a fiscal year. It generally does not happen, but you know, partnerships, corporations, S corps can have a fiscal year, but operating on a calendar year just makes life way simpler. All right, shareholders generally cannot be held personally liable for wrongful conduct or liabilities of the business, of the corporation. Please note I said generally, because there are some instances where the shareholder or employee of a corporation can be held personally liable. There are tax cases and legal cases that are on that, where, you know, the even though they were operating for the business, where they turned around to be personally liable for wrongful conduct or liabilities based on their own involvement. Okay, but generally speaking, they're not held liable for those things. Now, there are tax implications that are a little bit different, where there are some tax reasons why a shareholder or an employee can be held liable for taxes. So just keep that in mind. But generally, people want to form a corporation because they want to keep their business completely separate from their, from their personal lives. Okay, so this is one of the biggest questions I get. When should you have an LLC at a minimum? Okay, so drop shippers, starting out as a sole prop is completely fine. Okay, because you are simply the middle person. You are sending stuff from a supplier, you are sending it to a buyer. Okay, that's all. So starting out as a sole proprietor is absolutely perfectly okay. And then when your income supports it, get your LLC, because again, different states have different types of fees for having a business in their state, okay? But you want to make sure that your business can support those expenses. Retail arbitrage, folks, again, starting as a sole prop is okay for low liability products like books, for instance, okay? But if you're getting into grocery and toys and everything, have an LLC, simply because, you could possibly injure someone with a specific product, not you personally, but like when people go and swallow Tide Pods, y'all, that's what I'm talking about. Okay, but you definitely want to get to, when you have like grocery and toys, things that can cause physical harm to other people, you definitely want to get an LLC. Private label peeps, absolutely, you should have an LLC at a minimum. Okay. Handmade products like skincare, things with small parts, anything that will impact the health and welfare of another, LLC for sure. But in all of this, whether you are a sole proprietor or retail arbitrage, whatever you are in e-commerce, you want to make sure that you have proper business liability insurance to protect yourselves. Okay. Okay, so I want to answer some frequently asked questions. Okay, these are calls that I get throughout the year. They're asking the same things. First, I'm going to start out with street committee tax advice is generally wrong. Just because your friend has a specific type of business structure doesn't mean that it's the right thing for you. Just because your coach has a business structure doesn't mean it's right for you. People want to talk about, okay, you want to operate like the millionaires operate. Well, no, not if you're not a millionaire. Okay, just no. So I want to talk about each one of these so that, you know, you get a lot of these questions answered and just know going forward. So one, yes, LLCs can make an election to be taxed as an S Corp or a C Corp. And yes, LLCs, S Corps, and C Corps can limit liability. However, if your business is not properly run, then you can experience what's called piercing of the corporate veil in the event of a lawsuit. Okay, I get a lot of people who call me and, you know, they've got all of this money mixed together. This is the $5 word for that is called commingling. And that's when you're mixing your business money with your personal money. You're paying for personal expenses out of your business account. You're paying for business expenses out of your personal account. Or you just have one account where all of your business income, expenses, all of that goes. That will cause piercing of the corporate veil, and you lose all of the liability protection that these business structures offer. So if you don't have the proper setup, having this business structure does absolutely nothing for you. Attorneys can definitely explain that better to you, but just understand that when you're commingling funds, that's one of the fastest ways to lose the liability protection of your business structure. Yes, there is a cost to compliance. When you have these different business structures, and especially when you're getting into S Corps and C Corps, you have to know that it's going to cost you more. You need to have proper bookkeeping in place. You need to have payroll in place, and you have additional tax returns to file. You have employee tax returns to file, as well as having the business tax returns to file, in addition to your personal tax returns to file. All of that costs, and you as the business owner cannot do it all yourself. Even if you do, there's still a cost. There's cost for bookkeeping software, there's cost for payroll companies, and again, there's cost for these returns. So just know that money is definitely a factor when it comes down to making corporate elections. And yes, you need to seek competent tax and legal advice before making an election, okay? Number one, do not confuse legal concerns with tax concerns. Those are two different things, okay? But getting competent legal and tax advice is key. Pay for the consultations, because getting into these business structures is really easy. You go to a website, there's lots of them out there, and you say you want to make an S election, and they say, okay, great. Right? They let you do what you want to do. But what these websites don't do is tell you everything that you need to know before you make the election. They're letting you do what you want. It doesn't mean that it's the right thing. So this is why you should, I highly encourage, almost demand, that you seek competent tax and legal advice so that you can get your legal concerns answered as well as your tax concerns answered. And so when you are making this corporate election, you are doing so with your eyes wide open and not getting caught on the back end with all of the compliance and all of that that goes with these business structures, and you wind up in a heap of trouble, okay, when it comes down to this stuff. Getting into the business structure is easy. Getting out, not so much. There is a cost to trying to get out, and it's generally more than what people are willing to pay. No, forming an LLC does not give you more tax deductions. I have lots of people who come to me like, oh, I was a sole prop, I wasn't legitimate, and I formed this LLC so I can get more tax deductions. When you form your single member LLC or multi-member LLC, your tax deductions are going to look the same as a single member LLC as it does for a sole proprietorship. For a multi-member LLC, is going to look the same as for a partnership. You're forming an LLC does not do anything as far as tax goes, okay? It provides a separate identity for your business. That is a legal concern. That's not a tax concern, okay? So forming an LLC to get more tax deductions is a no. And forming your LLC in another state does not save on taxes. This gets people into so much trouble because they want to go and farm in Delaware or Nevada or Wyoming, thinking that they don't have to abide by their state's rules. False. Okay. States like Wyoming, Nevada, and Delaware are legally easier on LLCs, but when it comes down to tax, you still have to operate based on your state rules. You have to register your LLC as a foreign entity in your state. You have to pay for that, and you have to follow the rules of your state. So by and large, as far as taxes go, forming your LLC in another state does zero for you. Okay. The other thing is the next point. You generally don't get to completely separate your business from your personal taxes. And so we talked about having the pass-through, right? Where you have your single member LLC on a Schedule C, it's already on your personal return. Your partnerships and S-corps, those pass through to your personal return. So you're still on there. When you own a corporation, your social security number is linked to that corporation. So if you try to do something funky with the corporation, it's still attached to you. So even if you have this elaborate structure, like people want to have the holding companies and all of that, it's still attached to you at some form with you personally. So you never get to really just completely detach when you own this business structure from your personal business. And especially when it comes down to employment taxes, when you have employees and there's an issue with employment taxes, you really don't get to separate your business from your personal. Okay. Next point. Not everyone needs an LLC to get started in business. Again, getting started as a sole proprietor is just fine. Most people start their businesses at home anyway, right? So you might be getting started just to get your feet wet, to figure things out. So no, not everybody needs an LLC to get started in business. You can get started as a sole proprietor and be just fine. Okay. And even still, a sole proprietorship is where you start. It's not where you stay. Okay. Next point. No, you cannot just issue yourself a 1099 NEC. It used to be the 1099 miscellaneous that recently changed from your corporation. Just no, that is not how it works. The rules state that if you have an S corp or a C corp and you work in the business, then you must be on payroll. So no, you just don't issue yourself a 1099 from anywhere. And no, I generally never recommend starting out as an S corp or a C corp, mainly because of those compliance costs. So if you don't have the money, if you don't have the structure in place, do not jump out here in these S corp and C corp streets, because that's generally not going to work out for you. And last, saving on federal taxes does not mean you'll save on state taxes. And I really want to bring this point to light, because when you're going and searching on the internet, looking at business structures and stuff, most people can only tell you about federal, because federal is the same across the United States, but states, not so much. So the advice that you're getting about these corporate elections is based on federal only. It's not taking the state requirements into account. And you have to do that math based on your state to make sure it makes sense for you. Because it might make sense to be an S corp in Alabama and it doesn't make sense to be an S corp in Georgia. It just depends on the state law. Okay. So just saving on federal taxes is not the only concern, and it does not mean that you will save on state taxes. All right, so upgrade bonus. Knowledge is not power, applied knowledge is power. And that's why I am hosting an implementation workshop on March 13th, 2021. We have not nailed down the time yet, but we will as soon as we know who else is going to attend. So you need to show up and you need to bring your questions as it relates to your business and taxes. And so that way you can get your answers based on your situation and not just general stuff. Okay, so my normal consultation rates is $300 per hour, but you get access just for purchasing the All Access Pass. So I encourage you to upgrade because that's the only way that you're going to get in. Now, if you come to me outside of this, I'm going to send you an invoice for a consultation. Okay, so take this opportunity now to get in, save the date, and if you can't make that particular date, then you will be able to just send your questions to me and I will answer them for you. All right, but you gotta be an All Access Pass holder. Boop. Okay, so this is how you get to me. This is all of my contact information. And again, if you need to schedule an appointment for whether it's for consultation or if you need assistance preparing your taxes, my calendar does fill quickly. So there is the link to schedule an appointment with me. But if you don't see anything that works for you, shoot me an email at homebiztaxlady@gmail.com and we'll see if we can find a time for you. You can find me mainly on Facebook and YouTube. That's where I hang out the most, but I'm also on Instagram, Twitter, and LinkedIn, all as the Home Biz Tax Lady. All right. So thank you guys so much for joining us for this eCom Seller Virtual Summit. It's been my pleasure to be here and I'm always honored to be here. So thank you guys so much. Have a great summit and I will see you all next time. Bye. Why do we wave? Bye guys.